Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. This morning, global currencies are attempting to return to their levels from Friday before the release of US employment data. Right after the data was published, the dollar weakened due to the weak figures, but market participants quickly realized that those figures were likely inaccurate due to hurricanes and strikes. Second, they could be quickly offset by strong data in the following month, November, as recovery efforts and strike resolutions typically create more jobs, as has happened in similar situations before. The opening gap in the market and the lack of testing of nearby target levels in both directions suggest intense volatility immediately after the presidential election. The market oscillator's move into the positive area indicates an initial upward move. This movement may be limited to the target range of 1.0935-0950, or it could extend further to the second target of 1.1010. 50% correction, which is also near the MACD line. It's a blue line on a graphic. After that, a potential reversal back down to support at 1.0707 or 0724. According to the latest poll over the weekend, Harris is leading Trump with an electoral vote count of 276 to 251. 11 undecided votes remain, but Harris would still be the victory, even if they shift to Trump. This significantly complicates the situation. An initial false move downward to cover the gap around 1.0724 could be followed by a substantial rise, supported by an expected dovish Federal Reserve meeting on Thursday, with a 0.25% rate cut and corresponding rhetoric. Such a move would push out those traders who bought the dollar expecting a Trump victory. On the 4-hour chart, the Marlin oscillator is moving toward the upper boundary of its ascending channel. The price has risen above the 1.0882 resistance level. We currently expect an increase into the target range of 1.0935-0950. Gold, sweet gold. We've got a trading plan for these commodity asset presented by Dimitrios Tsoupas. On Friday, the weekly result was marked by an uncertainty candle with an extended upper shadow. It is possible that the bears found a good spot for corrective decline as the bulls failed to reach 2800 and closed October below the psychological level of 2750, which had been actively tested throughout the second half of the month. It should be noted that the bears secured support from the daily short-term trend 2749, which is now defending their interests. If a decline develops, the primary task for the bears at this section of the chart will be to test, break and eliminate the daily golden cross, which currently can be marked at levels 2718, 2696 and 2674. For the bulls, the nearest prospects maintain their relevance and positions. New bullish opportunities may arise only after the 2750 level is broken and the resistance zone 2800 is tested and overcome. On the lower timeframes, the pair tested the weekly long-term trend 2756 from below on Friday, with the pairs managing to defend their advantage and remain below the trend. Soon, it will be necessary for the bears to break through the H4 cloud, exit and secure a position in the bearish zone relative to the cloud. If the cloud break is released, additional downward targets on the lower timeframes, including the supports of the classic pivot levels, will be added with the newly formed target for the H4 cloud breakout. If the bulls use the cloud support and push off from it, simultaneously gaining the weekly long-term trend 2756, then the intraday market focus will shift to the resistances of the classic pivot levels. On the high time frames, bulls will gain aim to conquer 2750 and reach 2800. That's all for today. Wish you best of luck.